as we saw earlier, Mariam Namazi, she is at Credit Suisse headquarters in Zurich, and she's been talking to the CEO, Brady Dougan. Now, she started off by asking him about those plans to shrink the bank's investment unit, and this is what he told Mariam.
The biggest efforts within the investment bank are really making sure we get back to an investment banking business that can make a return on equity that's in excess of the group's 15% target. And the plans that we've announced actually mean that every single division within investment banking produces a return that's above that 15%. So a lot of that is really around RWA mitigation, reducing the capital required in the business, particularly in the fixed income side of the business, and making sure that we're making very substantial returns in our investment banking business on an ongoing basis.
Brady Dougan also spoke about the bank's business model.
Our wealth management business has been a very strong performer, and if you look over the past 3-4 years since the crisis, we've gained more market share in the private banking business than any competitor by a factor of 2 or 3. I mean, we've had over $200 billion of net new assets over the past 3 years, so we've had very strong performance in that business. It is a business where the overall environment is continuing to evolve. We think the regulatory environment is one that's actually evolving in a positive direction. So, for instance, the agreement between Switzerland and Germany, the agreement between Switzerland and the UK, those we think are very positive elements that give us, a much more solid basis on which to drive the business going forward. So we actually think that the future for the wealth management business is one that's very positive, and we've never had a business model that really, depended on any of the issues around, tax issues. We've always basically worked on a business model that focused on compliant money.